Well, look, when I said that, this was right after the president boldly put travel restrictions on China. When I said that, it was true, factually. There are only about 50 cases now. I don't believe anybody could have predicted or expected the kind of dramatic surge that we've been having as this thing takes over. I'm just saying I'm as good as the facts. The facts change. Of course, I've changed my view, but that's what I was trying to communicate at the time. It was in hand and it was contained. Now we're way beyond that. Again, nobody could have predicted or expected this. And we're working on, this financial package to try to keep the economy going again. That's the important point.
Absolutely. Larry, there's two other comments that you've made that people I know are a little upset about. It was in late February saying that, you could look at the market, the stock market, take a look at it. It's cheaper than it was. That was 35% ago. Telling David Faber, you should go to work, go about your business. America should stay at work. I mean, was there anything that you guys were told at the time that indicated coronavirus needed to be taken more seriously or not? Or were you not given that information? Help us understand.
Well, again, the situation overtook a lot of things, and we've had to change our strategy just like every other country in the world had to change our strategy. So regarding the market, right now, I would probably make the same point. Secretary Mnuchin has made this point. Other people have made this point. If you're a long-term investor, I would bet on America, and I would stay in the market, and I might want to buy. You've got a 30% down. We've been through these things before, Kelly, 1987, 2008. I think the market becomes more attractive. Price earnings multiples have come down. Again, that's not the key point now. But again, for long-term investing, I always stay with America. And the key point right now, if I can get back to the financial assistance package, this is the largest Main Street financial assistance program in history. Main Street. All right, we're talking about helping individuals and families and small businesses and the workforce. And again, if you're a solvent company, at the beginning of this year, January 1st, you're going to be solvent. We will make sure you will be solvent on July 1st. Okay, we will keep that good businesses in place. And in particular, I want the Federal Reserve lending program, which they have expanded under 313 with the Treasury Department. They have now done a great job. They have expanded this to small businesses, student loans, automobile loans, credit card loans, money market funds, commercial paper, and a variety of other points. The key point is this is a transparent program. The Treasury's Exchange Stabilization Fund provides the equity so that the Federal Reserve can make these loans, and the loans will get to Main Street. The loans will get to the small business, which then can continue to pay the workers very rapidly. That's the key point I want to make here. And I think that's why this bill has got to pass in order to shore up the economy and bolster the economy so we can get through this. I think it's a matter of weeks and months. It is not years. That's why this package is so important.
Larry, why do you think that let me, I guess, phrase it a little bit differently. We hear now this discussion by the president, but by others, about whether we should keep this economy sort of open, so to speak, and functioning as much as possible, or whether we need to shut things down entirely in order to contain the human toll, which threatens to overwhelm the healthcare system. Can you explain to us what the swing factor is? In other words, at what point do we determine that it's safe enough for the country overall or for region by region to go back to work? Are we going to quarantine just the most vulnerable population? Or what does that mean when we say we're going to reassess and see whether the economy is going back to normal? What will make that determination?
Well, I'm not the health expert. We're going to look at a lot of things. I mean, I think what the president is expressing, and I've heard this from a lot of very smart people active in the economy and the markets. At some point, you have to ask yourself whether the shutdown isn't doing more harm than good. In economic terms, perhaps even in health terms. And again, I'm not the health expert. I think, as my friend Scott Gottlieb wrote in the Journal today, widespread testing, we are now embarked on massive testing programs, will probably help. to isolate, as you say, geographically. Maybe that's what we have to focus on. I don't want to make any commitments here. I'm just saying people are asking whether the shutdowns are not making the patient worse. I can't answer that, Kelly. It's not my place to, but I think it's an appropriate question. And again, I come back to this financial assistance package. I want to keep the small businesses open. I want to keep the workers working. I want to keep the payrolls intact, and we're willing to do whatever it takes, working with these assistance programs, working with the Federal Reserve and the Treasury programs. This is the essential point. This is an incredibly difficult, challenging period. No question about it. It's completely different than it was a month or 6 weeks ago. Everybody knows that. I don't think we should have to harp on that point. The point is, from here, can we keep the U.S. economy going? Can we bolster the economy? Can we help the workers and the families and the small businesses? I believe this package is incredibly important. The sooner they get it done, the faster it's going to start helping it. This will hopefully get us through the next bunch of weeks where we think the worst difficulties may lie.
Absolutely. So let me ask you about the access to this money. This is one of the main questions that's coming up from people. They say, how? Where do I go to get the money? Is it to my bank because it's going to be a small business administration funds, or is it, as you just referenced, something that comes from the Federal Reserve? Again, does that go through a local bank? I mean, how does this work? Where should people go?
Well, it's a good question. I think the Federal Reserve lending will run through the markets. First of all, you've got a lot of securities that they're backstopping right now, asset-backed securities. Secondly, the assistance will probably run through the banks. Most of it will run through banks that will get it into the small and medium businesses. And that can be done pretty fast because, remember, the Treasury and the U.S. government is backstopping. We are essentially guaranteeing this. So those would be the two avenues. Now, the other parts of the package, the $3,000 per family, for example, I think most of that's going to run through the IRS. And that will be a rapid delivery system. Unemployment compensation, where we've plussed it up so that unemployment insurance will be equal to your wages. That will run through the unemployment system. Some of that might run through the IRS. I think those delivery systems have to be worked through. It could be done fairly rapidly. But I think the banks are going to play a big role. And I think the reason that the Exchange Stabilization Fund is so important is that provides the equity for the Fed's lending programs. That provides the guarantee for it. And that's why talk about, slush funds and so forth. It's just not the case. Again, this is the largest Main Street financial assistance program in history. It's covering everybody. It's not just a couple of companies. It's going to cover the whole broad-based economy. And it's going to fund a small and medium business as much as more than anything. That's half the economy right there, is it not, the small and medium businesses? So you're really going right after it, and it'll be broad-based, and it's not going to be limited to a few corporations, not at all.
Are there strings attached to the corporate lifelines, let's call them, that have to do with buybacks, that have to do with employee retention, things of that nature? And will the taxpayer participate on the upside? Is there going to be equity? Because like TARP, I mean, we made a ton of money on that ultimately with the government, so to speak, buying in at the lows. What are the strings that you would attach to this, if any, in this package, or can that all continue to be worked out?
Well, I think it's going to be worked out. I think some of those conditions will be attached. I myself particularly like the taxpayer taking a piece of equity in these loans, as you noted. That turned out very well 10 years ago or so, and could probably be tried again. Warrants are a possibility. I don't want to get ahead of the story, and I don't want to get into too many of the details because those are under discussion. Other conditions may end. It was very strong, as you know. Mm-hmm. January and February were very strong months. before the virus took off. And so we're hoping to pick up where we left off, and that's why we want to maintain the payrolls and the individuals working and the small businesses. You know, you can't have a good job unless you have a good business to work at. So both sides will be impacted, and that's the hope that we have. We get to the other side of this, we will come back very strong. America usually does.
Well, and that's why we're watching so closely, obviously, all the action on Capitol Hill today. Larry, one final question, which is, there are smart investors I talk to who look at the credit markets and say, you know, it's going to get worse in the stock market before it gets better. Now, we don't know how much worse. Is there a plan? I mean, we've already broken the glass, right? We have fiscal stimulus going. The Fed's thrown everything that it has there. Is there a further plan, a backstop, if the stock markets look a whole lot worse in the near future? Or do we just have to accept that this is part of the process of discounting this hit to the economy, which some are saying could be 30 or 40% in the second quarter?
Well, look, you know what, Kelly? I'll cross those bridges when we get to them. Let's do this one step at a time. Let's get this financial package. I'm calling it a mainstream package. That's basically what it is, to help the workforce and to help families, okay? Let's keep the businesses that were solvent at the beginning of the year solvent through the summer, all right? Let's keep the assistance programs in place. I don't want to make any forecasts on that. We could conceivably come back with more, or as you implied before, we might have a different strategy. Right now, we're committed to this financial assistance. Nothing, in my view, nothing is more important than this financial assistance package that is before us. I hope they do get a vote today.
Larry, I just have to ask you on a personal level before we go, what is your number one regret about this past 6 weeks? Is it that the CDC didn't do a better job of telling you guys what was going on or getting the tests ready? Is it that, you know, I mean, when you look back on it, so much time was lost, and I understand we haven't been through something like this before in the U.S., but, you know, Asian countries had. I mean, what is kind of the one thing that you just sit there going, you know, if only we had done this different, or if someone had just told us, or we had, you know, what is that one thing? Or maybe there's multiple things.
I would, you know, this is a hard, difficult position.
Yeah.
Have we ever been in a position like this before? No. All right, at least not in my time. I've been through a whole number of crashes and downturns and this and that. Nothing like this. I'm not going to pick apart. I'm not going to second guess. I think we have to look ahead. I think, you know, people in this administration have been working very, very hard. We've got really smart people. The health people are working hard. Our economic teams are working hard. We're dealing with the unknown, and we're doing the best we can. So I'm not going to single out one thing. This is what it is, and we're trying to cope with it as the best we can. Virtually the entire country is mobilized. The president has been, in my view, he has been a terrific leader in this. He was early with the travel restrictions, and he was early with the task force, and we've been early in communicating and working with the private sector and trying to develop remedies and therapies and vaccines. And he was early with the European travel restrictions. We've done what we can. Things turned out to be much, much, much tougher than anybody dreamed possible. So I don't want to get into the blame game or the second-guessing game. We are doing the best we can, mobilizing America's resources. And I think if you look down through history, Kelly, America's resources usually work out very, very well, and we are capable of dealing with problems and coming out the other side in even better shape than we started.
Yeah, for me, it's not, you know, the blame game. It's not. It's lessons learned. Unfortunately, this is probably not the last time we're going to deal with something like this. Hopefully, it's the last time for a while. But, you know, you're coming off the worst month for the market since 1931. I just don't like those kind of stats, you know.
Well, you just have to move through it. Again, I can't predict. All I know is we have completely mobilized. It's government-wide, but it's country-wide. It's America-wide. It includes the smartest people in the private sector. It includes the scientific and medical community. It includes the economic thinking. We're just doing the very best we can, and I think you have to keep your chin up, and I think you have to have a lot of faith that we will get through this. I personally believe we will. You know I'm an optimist, and I worked through with you and others when we were broadcasting during 08 and 09 and 10, We came out of that, and we got even better. Recent years, the economy picked up. I'm going to give the president's policies. Before this tragedy, the economy was doing extremely well by all accounts. There's no reason why we can't pick it up from there. There's no reason why we can't get through this period. And these large market declines can reverse themselves very rapidly, Kelly. And over time, that's the history of the U.S. stock market. It takes its hits, sometimes brutal hits, but it manages to come back and grow. That's why I think long-term investing is still a good idea.
All right, Larry, thank you for your time today. We appreciate it very much. Big day. We've had a lot of them lately. Larry, thanks. Larry Kudlow is the National Economic Council Director. Again, referring to the stimulus bill, we are awaiting a vote from just to see if it can kind of go back to the floor here in the next hour or so. Mr. Kudlow, as you just heard him saying, quote, if you're a long-term investor, I would bet on America, adding that the stimulus package covers the broad economy, will help fast in the coming weeks, and that the Fed's moves today are crucial and will provide a backstop.